I guess we'll go ahead and start off with welcome, Tom.
Thanks for having me. It's great to be here.
All right, thanks for helping us out with some sound issues. We love to take technology very seriously at Virginia Tech, though we are excellent at making all kinds of fun blunders. Well, let me do a brief intro for our session, a couple of logistical things, and then a quick bio about Tom. Some of the logistical stuff, please ask your questions into the chat. We're really hoping to make this into an interactive session, so please feel free to drop anything in there. I'd love to get to the questions that come out of the audience. We have a new session that we're adding to Blocksburg at 1 o'clock. That's going to be a student panel that's talking about some of the blockchain education efforts, some of the projects the blockchain club here in VCU are going to be doing. So please check that out. It's not on the schedule, but we're definitely glad to have them on there. And then lastly, we're going to have video recordings of all the sessions. So if you happen to miss one, or if you have to run to a meeting or something like that, we're going to be posting everything online afterwards. So please check that out. All right, so let's get us started off with session number 3. We're going to be talking about crypto and traditional finance and the future of blockchain, kind of where things are heading. And we're really excited to have Tom Farley be our guest here today. He will serve as the incoming Bullish CEO, responsible for creating and planning and implementing the company's strategic direction. Tom is currently the chairman and CEO of Far Peak Acquisition Corporation and chairman of Global Blue Group Holding AG. He brings many years of executive leadership to the finance industry, including serving as the president of the New York Stock Exchange Group. So, Tom, welcome. We're excited to have you here today.
Yeah, I appreciate it. Thank you. It's nice to kind of meet all of you. I look forward to being able to do so in person soon.
Yeah, absolutely. We definitely would love, if you're going to be heading to the Blocksburg part of Bullish at any time soon, we'd love to organize a time where we can get you interacting with some students, or maybe in front of the blockchain club, something like that. We'd love to get it going.
Yeah, sure, we'll do, and I will be. Our the Bullish Brain Trust is right down there in Blocksburg. The group that really powers the development, product innovation, all that sort of stuff is it's kind of, there's a nucleus that group is down there in Blocksburg.
Yeah, it's been exciting to have Block One and Bullish and kind of that partnership continuing here. So we're definitely excited to have you guys here in Blocksburg and truly bring some blockchain expertise to the Blocksburg area. So, cool. All right, well, let's dive into some questions here. Tom, your background comes from traditional finance. You've been moving closer and closer to crypto and the blockchain space over time. And, this seems to be something that's a calibrated effort for you. You've been at the New York Stock Exchange and kind of famously put about $10 million into Coinbase in 2013. Tell us a bit about how your interest has been piqued by the blockchain space and why you're starting to devote yourself full time to it.
Yeah, sure thing. I grew up not too far, I guess, in a cosmic sense, from Blacksburg in Prince George's County, Maryland. Went to high school and university in Washington, D.C. So certainly a couple neighboring locales. Had many friends that went to Virginia Tech, so I'm well aware of what a wonderful school it is, and how bright the students and notably the faculty as well, James, are at Virginia Tech. I didn't necessarily know what field I wanted to go into. I guess if I could live my life over again, maybe I would have had a little bit more rigorous engineering or computer science background, because I'm genuinely interested in it, but I didn't train in that fashion. And so when I got out of school, I went into finance. I just ended up there, and I kind of learned that for me, where my passion lies is kind of being good at something. So it wasn't necessarily accounting or finance or what have you. It was just learning and contributing and feeling like I was a meaningful part of a team. And so spent a lot of time just grinding and trying to learn as much about business as I could. And I remember the first example of that was just learning what financial statements were, because I had a broad-based kind of liberal arts education. I didn't understand like how a cash flow statement linked into an income statement. And I was like the only one in my group that actually found that the slightest bit interesting. So spent all that time and then ultimately got into the exchange sector. And I was a bit of a knucklehead, frankly, when I went into the exchange sector. I was still in my 20s. At times, maybe tried to be somebody I wasn't, tried to be older and wiser than I was. Made a ton of mistakes, but I at least kind of had a North Star, which was try to educate myself to the greatest extent possible. Be a good ethical person, but really think about what drives business, what creates a more efficient economy, what do customers want, how can we meet those needs, how do you balance being entrepreneurial and innovative with a regulated business, and in doing all that in this exchange context. And what I realized over a period of time, and I worked hard, so I also got lucky, with all appropriate humility. Worked hard and got lucky, and I got these cool exchange jobs where, when I was still in my 20s, I found myself running the world's futures exchange for sugar, coffee, cocoa, cotton, orange juice. If you're a sugar farmer in Brazil, or you're a cocoa farmer in the Ivory Coast, there's only one market where you can hedge, and that's what was called the New York Board of Trade. And I was running that business as a chief executive in my 20s, again, making a million mistakes. We could talk about that for hours. There's some good stories, but I was at least learning kind of what made a good exchange. And what I realized by the year 2013, fast forward 6 or 7 years, was the exchange sector was really inefficient. There was lots of middlemen and middlewomen with their hands out, kind of collecting rent on the end customer, the Brazilian sugar farmer, the Ivorian Coast farmer, or in the context of equities, the company actually issuing equities, or mom and pop that's buying the security and putting it in their Schwab account. There's just all sorts of toll takers, and exchanges are one such toll taker, but you need risk transference at some point. There was all sorts of other toll takers, transfer agents, and the folks who were holding the stock, and the auditors and the regulators, and on and on and on. And fast forward, my wife grew up in Cape Cod. Both her parents were school teachers in Boston. And so she'd spend the summer in Cape Cod. She has a great little community there. And I'm there in Cape Cod in that community, and I'm talking to this kid, and he was a kid, 22, across the street. And he says, hey, this guy was brilliant. I knew he was brilliant from the time he was 10. He was already he was always walking around, coding for dummies at age 10. He was one of these like just ultimate nerdlers who was like so far beyond me when it came to technology. And I'm like, dude, what are you up to? And he's like, oh, I'm going to work at a blockchain company. And I'm like, what is a blockchain? I don't even know what you're talking about. And he's like, you're going to love it. Let me sit here on this swing, and we'll rap about it together. And he starts telling me about this thing. And everything he says tells me it's going to disintermediate the New York Stock Exchange that I'm running. I'm the president. I'm the chief executive of the New York Stock Exchange. And this 22-year-old kid is basically like, all of that inefficiency, we're going to take this out of the system. And I was like, I don't fully know what you're talking about, but I'm nervous, and I want to know what's going on. And I want to put money in this thing. What's it called? He said, it's called Coinbase. And so we threw $10 million into pre-revenue Coinbase in 2012. I think the deal closed in 2013. That's what James said in the bio. I thought it was 2012, but regardless, doesn't matter. And the only thing I cared about was, obviously it'd be nice to make a return on it, but we're in the New York Stock Exchange, $10 million, like a drop in the bucket. What we really cared about was, how can we learn here? And we negotiated board observer rights, board information rights for me personally, which was, that was amazing. I got to sit there and learn, ask stupid questions. And I just became more and more enamored with kind of digital assets. What happened is, over time, digital assets grew very quickly, if you remember. And then a lot of people came into the space, not necessarily charlatans, but kind of like, oh, blockchain. They didn't even necessarily know what the blockchain was. Like, oh, you should use a blockchain, and you should use a blockchain. And so there was this couple of years, 2016, 2017, 2018, where it stalled out a little bit. The innovation stalled out a little bit. And then 2018 into ultimately this year, DeFi summer, the thing is exploding. And I was like, I got to go in with both feet, both hands. I have some experience running exchanges. I have some experience in different asset classes. And if I want to be part of this wave, this digital assets wave, I can't do it from the sidelines anymore, because the kids that are coming out of Virginia Tech and elsewhere are just too friggin' smart. They're putting all their time into it. And if I wait another couple of years, I'm going to be left behind. So I just jumped in, merging with Bullish, going in as the CEO, get to work with brilliant people like our colleagues in Blocksburg. My colleague, Mark Woods, Virginia Tech alumnus, our head of product, who actually presented to the whole Bullish company this morning about what our vision is. Brilliant vision. So I'm having a blast. Anyway, how's that for like a 10-minute monologue? I hope, James, I didn't filibuster you to death.
No, I think you did a great job, though. I think you've gone from sitting on a swing in Cape Cod to, the early days. We really got a full picture of the Tom Farley experience. So, talking about traditional finance and how it started to really embrace cryptocurrency, and I feel like that's just kind of happening writ large now. Joe Biden's made a lot of news here recently with an executive order he's issued that's really provided a lot of legitimacy to the industry, to blockchain overall. It's been a big topic at Bitcoin Miami. Could you talk a bit about what opportunities are presented by that executive order and kind of how that dovetails with your agenda as the incoming CEO there, but also how you see that impacting the world?
Yeah, sure. By the way, I joined the last session, and I just want to say, Justin and Noah were great. So I usually like to follow a bad act. That's why I joined early, hoping I was going to be able to like liven it up. Those guys are great. I could have listened to them for another hour. The executive order was cool. So whenever there's a wave of innovation, and this goes to this goes back to like the horse and buggy, and then the automobile, or maybe I should say the railroad, and then the airplane, and then the automobile. But in the case of technology, telephone wires and so on and so forth, there's always a balance between supporting innovation, really embracing it, but also protecting consumers. Because along with every single wave, and financial innovations are the most susceptible to this, you will get scammers. People will get hurt. The proverbial, an actual grandmother in Des Moines will have somebody take their life savings. But in order to, but you're not going to hold back innovation. It's very difficult. It's very difficult to hold back innovation. And what I always look for is, are people talking about innovation and how to support interesting innovation? Think of the internet. Or do they lead first and foremost, first, second, third with, this is what's wrong with it, this is what we must regulate, this is what we must get rid of. And there was a battle in DC that was brewing between those two camps. Oddly, I don't think anybody would have foreseen this. Some like Ted Cruz was a champion for cryptocurrency, and Elizabeth Warren, it somehow became a political issue where the far right was in favor of it, but the far left wasn't. Like, I would have thought it would have been the opposite. But Elizabeth Warren was very much against cryptocurrency, and you could kind of listen to the words, but you could also listen to the actions. And so I didn't know what the heck was going to come out of this executive order. In fact, I had a journalist call me the night before saying, "Hey, it's coming out tomorrow. What's in it?" And I was like, I'm so out of the loop. Like, I'm pins and needles. Like, there was part of me that expected the executive order to say, we've deemed these are all securities. Every exchange, including Coinbase, needs to shut down. They need to hand back customer deposits. Like DeFi, all DeFi platforms are deemed money launderers and Foreign Corrupt Practices Act violators. You need to shut down, or you're going to be in like orange jumpsuits and handcuffs or something. I'm exaggerating for effect, but you get the idea. And what came out of it instead was actually very constructive. It was, first and foremost, we love the innovation that's going on. We want to celebrate it. In fact, we want to legitimize it, validate it. We want to look at stablecoins as kind of powering this new digital asset ecosystem. We want to acknowledge that kind of the cat's out of the bag. The digital assets are here to stay, and they've plentiful benefits. But let's do it in a prudent way, and let's have sensible regulations so that it becomes a more trustworthy marketplace, and that the proverbial grandmother in Des Moines is not hurt. And so I really thought the balance was excellent, and I think that's why you saw Bitcoin pop. And I can tell you, at least from my perspective, with the Bullish investment and the Bullish initiative, I'm more bullish than ever, pun intended, given the executive order, which really kind of blasted out to the various government agencies the message: crypto's here to stay. Let's support it. Let's not get in the way of innovation, and let's put some prudent regulations in place to stop scam artists.
Yeah, it's definitely been a theme running across all the sessions, is the importance of actual regulation and just kind of understanding what the playing field is as a way to stimulate innovation, actually. So, I'm really interested in what you guys are about to start doing there at Bullish, and some of the distinctive qualities of backing exchanges with liquidity pools, using blockchain as a way to highly secure critical exchange infrastructure, and developing features that are going to leverage public blockchains. So take me under the hood a bit of what you're trying to do at Bullish, and talk a little bit about what your exchange and kind of how you guys are on the cutting edge there.
Sure. Let me start by saying the world, leading up to Christmas 2021, it wasn't obvious that the world needed another plain vanilla cryptocurrency exchange. If you go on CoinMarketCap, you'll see 100 or hundreds. But what we believe the world did need, and that was based on kind of speaking to customers, but watching what customers do as well, is they needed more reliable liquidity. And what does liquidity mean? And let me take a step back. Exchanges, so in my experience, New York Stock Exchange, how do exchanges compete? It's very simple. The exchange with the most prices, most quantity at the best prices on the bid or buy, offer or sell side, around as tightly as possible around the current market price at the moment in time that somebody wants to transact, wins. And that's liquidity. Why does it matter? Because the person who wants to transact, and it may be a pension fund, it may be a money manager, it may be a retail account, it may be somebody in distress, financial distress. When they transact, the most quantity at the best prices around the market price enables them to do so at the lowest possible cost. It brings efficiency to that particular marketplace, the overall economy. That's how exchanges compete. First and foremost, yes, exchanges compete on features and functions and the different things they offer. That's a rounding error. What really matters is in that Bitcoin USD pair, who's got the best prices? And in crypto, what we observed is the prices all disappeared. The moment Elon Musk puts out a tweet or there's a surprise inflation number, all those things disappear from all those exchanges because it's the same market makers that are making the same prices across hundreds of exchanges. And once they decide to pull it, they pull it everywhere. And that's where you see massive volatility, massive cost to execute. So that's kind of the setup, James. So what are we doing that's new or different? For every currency pair, so think Bitcoin, or Bitcoin, as measured in dollar terms, that's a currency pair. We are going to have a liquidity pool that supports that currency pair. Think of the liquidity pool as a box of assets. So Brianna shows up and says, I want to deposit in that box of assets. Well, give us some Bitcoin and give us some dollars because it's a currency pair. So Brianna says, okay, here's $1,000 of Bitcoin, here's $1,000 of USD, put it in the box. Then what we do is we run an algorithm over that box, super simple algorithm. Even I can build this in an Excel spreadsheet. It's called the Bancor algorithm. And what the Bancor algorithm answers is the following question. If Janine shows up and wants to trade a specific quantity of Bitcoin, let's say she wants to buy $800 worth of Bitcoin, what price do I need to make for Janine such that at the end of the trade, just as it was at the beginning of the trade, the assets in the box will be 50-50 relative to one another. So it'll be 50% Bitcoin measured in dollars, 50% actual dollars, obviously measured in dollars. That's it. That's all the algorithm does. It's not connected to the outside world. It doesn't know where the price is on Binance or any other exchange. And the prices that the algorithm creates, we display on it's called a central limit order book. That's just the industry lingo for the place you show those bids and offers. And we show them up on a platform, and they don't move when Elon Musk puts out a tweet. It is immutable liquidity. And the only way those prices move is Janine actually executes her trade. and lifts those offers or hits those bids. That's the terminology for when Janine buys or sells. There is no exchange in the world that is doing this, that has a liquidity pool in a kind of regulated fashion coupled with a central limit order book. There are liquidity pools that are quite successful in DeFi. The issue with DeFi is there's no AML, there's no KYC, there's no Bitcoin in DeFi. You'd have to wrap it. Now you're trusting a third party. There's an additional cost. There are gas fees in DeFi. There are rug pulls in DeFi, so on and so forth. So what's going on in DeFi is amazing innovation. And in fact, we're cribbing some of those concepts. But there's still lots of issues that need to be worked out. And so we're doing it in a different form or fashion that makes us unique from every other exchange in the world. Last thing I'll mention, we also happen to have roundabout, don't hold me to this number, we publish all this stuff with the SEC, so please review our financial statements. That goes for everything I say here. Please do not go out and buy or sell any stock based on what I'm saying. That is not, that is the last thing I'm after here. But we have roundabout, I don't know, $7 or $8 billion. Bullish does. It's gigantic amount of capital. We can use that to prime the pump in our liquidity pools and create the bids and offers ahead of, in my example, Brianna or third-party customers coming and depositing. So the capital allows us to kind of get the flywheel spinning a bit, which I'm excited about. But that's what we're up to. I didn't answer the blockchain portion, but given that I took 5 minutes doing it, maybe I'll shut up, James, and see where you want to go next.
Well, let's weave in an audience question that's coming in. Caleb asks, how would you say Bullish's liquidity pools improve decentralization, which is, core tenet of blockchain and kind of why a big reason for kind of why blockchain is an important new technology?
Yeah, no, I think it's a great question, Caleb. In some ways, I would say, let me before I say how it improves decentralization, let me start with the opposite, which is it's actually quite centralized. What we're doing is quite centralized. In other words, Bullish is a company that's based in Cayman. It has a Gibraltar sub. There is a board. There is a management team. The management team and the board are regulated by the Gibraltar Financial Services Commission. We're making decisions quite in a centralized fashion. If we're doing things that aren't kosher, from a compliance perspective, or they're not adding value to shareholders, the shareholders can remove the board can remove the management. So it's all kind of centralized in that way. So I don't want to belabor, I don't want to kind of sell you on the decentralization benefits, although I will in a moment. I want to kind of give you the precursor to it. The second thing I would say, and this goes back to James's, the second part of James's question, which I didn't answer, is we have built really our entire exchange on what I call an operating system that is itself a blockchain. So we use the EOS.IO software, which is blockchain software that's powered a number of public blockchains, EOS notably, Telos, Werbly, and everything we're doing at the exchange, we're running through that blockchain. So that gives us an immutable audit trail, which is beneficial in building credibility in the crypto space because there are a lot of hacks and rug pulls and outright fraud. So we have an immutable audit trail. We have a secure environment through which to deploy code. And in the future, given that we've built everything on a blockchain, we have the ability to turn that externally outside the four walls of Bullish or more easily connect to other public blockchains that are in existence. But it is a centralized blockchain. And so again, I don't want to beat around the bush. We do not have decentralization in the sense that we think of in terms of public blockchains. Now, we could get into a debate. Are public blockchains actually decentralized? I would argue in the case of Bitcoin and ETH, kind of, sort of, but there's only very few mining pools that effectively control those networks. So there's a spectrum of decentralization. But to go and answer your question directly, Caleb, what we're offering is unique and differentiated liquidity. And for the most part, once you get beyond, for the most part, the tokens that the coins and tokens that we are listing are those decentralized platforms. And what our general belief is, the world is not going to allow unfettered, unregulated risk transference of those tokens and coins, principally because you get bad actors. I mean, think bad state actors, think drug cartels, think hackers, very notably hackers. And so our view is you are going to have a degree of centralization with respect to exchanges. And we are one of those exchanges, but we will be able to transact in those decentralized protocols, provide liquidity to their tokens. Without liquidity, as we've all learned, these projects fail, they wither and die. And so that's where we're spending quite a bit of our time.
Fascinating. All right. One other question came in real quick that's kind of similar to that. And it's, kind of a thought that I had as you were explaining that is, so in effect, are you on some level kind of making almost a stable coin kind of a situation happen where you're kind of helping the price have a bit more stability and less susceptibility to those, the Elon tweets, as you mentioned, or, how does that act in some ways? And does it have some level of susceptibility to being open to, some of those drastic flips in prices that can just happen from a tweet from a high profile figure? How do you protect against those kinds of things, I guess?
Yeah, so I would say our hope and belief is that our model will lead to more stable coins, but not stable coins. So I want to parse that out, because stable coins, like we use stable coins strictly to refer, this is just us. We use it strictly to refer to those things that are like pegged to some other benchmark, and
sure.
And the most obvious are the dollar, USDT, USDC, UST. But absolutely, the reason why we're doing this, the reason why we believe the world wants this, is because we will bring stability to the traded prices of coins and tokens. And without going through all the nerdler math, if you can reduce volatility, you can improve the cost of capital, you can improve the liquidity for these projects and tokens, and you can make them therefore more valuable and ultimately more successful. That's absolutely what our model is. Thus far, we've invested, please don't hold me to any number that I say here, but round about $3 billion of assets into our liquidity pools. We went from, obviously November not having any business, December, a little bit of business. February, we had $97 million of run rate revenue. I don't know this to be the case, but my guess would be that we're the fastest growing exchange in history. And it's not because, we're like brilliant operators. It's because the world saw this and said, this looks interesting to trade. This is quite stable. Plus there may be opportunities to make an arbitrage profit. The model up to this point, touch wood, seems to be working nicely. And we've only deployed 3 of our 8 billion, around about 8 billion, 7 or 8 billion of assets. And the customers who are also able to deposit have only deposited at best a de minimis amount alongside us. It's really just been us priming the pump. So we feel like this model is really working nice. There's actually some examples in DeFi where these things have just worked incredibly. There's one DeFi AMM platform which uses this same Bancor model. I think they have like 8-9 billion that it's been invested by customers, and their trading volumes are huge, significant. So we take some comfort as well that the liquidity pool model has worked very well in DeFi.
Good deal. Well, I want to make sure, especially as we're starting to take some more questions on, that we get to a couple of the things that we had prepared for that are going to talk a little bit about what advice you might give to some of the students that are on the call. A lot of people who come to Blocksburg are CS students or those who are involved in the Virginia Tech blockchain club. So, especially, again, a company that's got a footprint in the CRC and it's even hiring quite a bit of Virginia Tech's graduates. What advice would you give to students graduating this spring about how to approach their career, especially those that are interested in a blockchain field, and kind of what parts of the industry do you see as being kind of the steeples of excellence and where you feel like people are heading toward?
Oh boy. I feel some pressure and anxiety answering that question. I just put myself in my shoes at your age. And I would say, just by virtue of the fact that you're on this webinar and listening to this, like you're ahead of where I was. So you're headed in a good track. I mean, just speaking from personal experience, I go back to something I said at the outset of the call, James. I like listening to graduation speeches. And I do it especially this time of year as a bit of like, with a glass of wine when I'm unwinding it at night. And you'll get a lot of people that talk about follow your passion. And that's one that's never resonated too much with me, because like the cold hard reality is that you also have to kind of make a living. And you have to think really critically about what are you good at? I have a friend who is a song and dance man, and I go watch him on stage, and I am so jealous. I was a fine arts minor at Georgetown. I wanted to be that, I wanted to be an entertainer, and I just wasn't good. And so while following your passion is interesting, and it's certainly great, if I could have been a song and dance man or played first base for the Orioles, that would have been wonderful. You also do have to think critically about, like, I have to make a living. What am I good at? And am I doing something that's kind of good and honorable for society? Ultimately, what I find, this is just myself, again, I don't know it applies to everyone. I want to reiterate what I said at the outset. What I like doing, what I'm passionate about, is being good. And so there was no substitute for me for, okay, what are the things that I'm particularly, talented in, or I've learned, I've gathered in my career, I'm comfortable with, and then coupling it with just good old fashioned hard work, especially when I was young in my career. And it didn't always feel passionate. It didn't always feel like this is the absolute greatest thing, but I would always ask myself, am I being challenged sufficient that 5 years from now, 10 years from now, 15 years from now, I'll be in a better place? And so that was always the framework that I took, was, okay, what am I kind of good at a minimum? And if I work hard, is this a meritocracy, the environment I'm in, the culture I'm in, such that I can be hugely successful? And what I found is I got more and more and more passionate. And I was involved. So passion again grew because I got better at it. I also was in a couple bad cultures. And you have to recognize when you're in a bad culture, you're just not happy. You might be working hard, you might be tired, but you can still be happy. You can wish you weren't working quite as hard, but at least you're working with good people and they respect you as a human being. But once in particular, I was just in a place that wasn't like that. And sometimes you need to be able to pull the ripcord and put yourself in a better place. You're not always going to be able to fix it. So anyway, that was a bit long-winded. I know it's a little different than maybe what other people say, but it's just based on my own experience.
Yeah, it's not far from what I would tell students oftentimes is, follow that passion, put together that Fulbright application. Don't just do the very obvious, like, let's get a job kind of stuff. Because I do think you oftentimes look back on those, not to get too Robert Frostish, but the past not taken. So, one of the big buzzwords of just really culture right now is the metaverse. And it's a huge, a thing that's coming. Companies are positioning themselves to be ready. Microsoft's taken on Activision. Meta is now what Facebook is called. We're seeing, Unity, Roblox, all kinds of companies that are emerging. Talk a bit about how you guys see Bullish positioning itself to be alongside a world that is kind of dominated by the metaverse, and the ways that you see that kind of growing as an important feature of our society.
Yeah, sure thing. I actually have another perspective, and maybe I'll just tell you a little bit of a story about what I would say is bad luck, but perseverance at the same time. So I left the New York Stock Exchange in June of 2018, and I'd been doing it at that point for around about 6 years. It was the coolest job ever. I was there with Jack Ma on the Bell podium when they had their IPO, and I met heads of state everywhere. I traveled with the President of the United States, and people said, "What is wrong with you? How could you possibly leave that job?" And the reason was I was exhausted. I wanted to spend time with my 3 daughters. I was working nonstop, and I also wanted to challenge myself with something a little entrepreneurial. It just so happened that I had a woman that I worked with who increasingly was doing all the hard work, and I was taking all the credit for it. And I thought to myself, somebody exited stage left, so I could take the job running the New York Stock Exchange, which is a pretty amazing job. Maybe it's time I do that as well. So all those factors kind of came together, and I left on a Friday. The woman, Stacy, by the way, took over the New York Stock Exchange, first woman in 220 years to run the New York Stock Exchange, and did a much better job than I ever did. So it was the right decision for a variety of reasons. But I left on a Friday, and on Monday, I went out on the road and I raised money as part of an investment fund, something called a SPAC. And I scoured the world and I found the ultimate deal. And we announced it. My partner, Dave Bonanno, and I announced the deal in January 7th or 8th or something like that, 2020. And our business that we were buying is the world's VAT tax refund. So we don't have VAT tax in the US, but anywhere else you go in the world, you buy a luxury good. If you're, let's say, an American or a foreigner, you can go to the airport and you can get that tax refunded in actual cash, put in your hand. It's a very big business. And we bought Global Blue, which is 72% market share, really great business. The market loved it. And one day later, the New York Times wrote their first article about COVID. And 100% of our revenue was coming from people crossing international borders and buying stuff. So suffice it to say, 2020 was a stressful year.
Tough timing for sure.
But we persevered, and we're able to reconfigure the transaction. And that company is a public company and still hasn't come back to full steam, but it's on its way. The reason why I bring it up is we have 300,000 merchants, include 75,000 distinct merchants, 300,000 merchant locations. I'm the chairman of that company. It's a public company on the New York Stock Exchange. And increasingly, we're getting our customers asking us, hey, what about the metaverse? If we're selling a luxury good, let's say it's a Birkin bag at Hermes, we're missing out if we're not giving somebody a duplicate for the metaverse, a branded, let's say Birkin bag that they can take with them and they can use in the metaverse and in whatever world they're in, on whatever blockchain they're in, just like they can with Bored Ape, they can with the Birkin bag that they purchased. And so it's an interesting example of kind of being dragged by customers into something that's a lot more, that's very different from what we were doing, put it that way. At Bullish, we've been less focused on it because we want, in the first instance, to be the most liquid exchange with the lowest cost of executing for the coins and tokens that are in existence today. And our focus, in fact, we've even narrowed our focus to let's just focus on institutions in the year 2022. If retail wants to come on the platform, that's fine. But we have a general belief, and it's not just me, it's the whole of the management team. We have a general belief that if you don't focus, you're going to fail. And so do we pay attention to the metaverse in our personal lives and in what we're following? Of course. Are we trying to stay avant-garde with respect to the developments in the metaverse? Yeah, we absolutely are. But for now, it's just what can we bring our customers with respect to liquidity, like, for example, in the Bitcoin market.
Sure. Here's a one that's a little closer to maybe your core business, is a question from Lynn. She's asking, so do you think the slow emergence of CBDCs might make cryptocurrencies go to the wayside? And just to add a little taste to that question too, I think how do CBDCs kind of sit next to cryptocurrencies, and how do you see those working on a marketplace or an exchange like yours?
I don't know. Flip it around, you guys, ask what you think. I guess if you had to pin me down, I'm not sure they do coexist in a meaningful way. I mean, just look at the issuance of USDC, look at the issuance of Tether. Lately, look at the issuance of UST. And you look at Biden's executive order, yeah, there's the notion of CBDCs, but even stronger is the notion of, okay, we got big issuers of existing stablecoins. How do we put the kind of compliant wrapper around them so that we make sure, for example, if they say the total value of their stablecoin is backed by cash, we make sure it truly is backed by cash. Or in the case of UST, if they say our algorithm works in the following way, we're not backed by cash, and oh, by the way, we could have a run in the bank. disclosing appropriately, accurately, in a way that a lay person, a lay investor, woman or man who buys UST can understand. So I kind of think it's one of those that maybe the government will just stay out of in the long run, or try to get involved and fail. And I'm speaking specifically about U.S. government. I guess that if you had to pin me down, that's my best view of how it will transpire.
Yeah, I kind of see them being in different lanes. But I think that's at least to some degree what you're saying. I think CBDCs do kind of try to be a little bit more of a currency, and I think sometimes it's difficult to see cryptocurrencies being used as something that you might buy a Slurpee with or a car. So yeah. It's tougher to.
It's interesting going way back, 2014, 2015. My view was stable coins would not exist, and that everything would be CBDCs. So that's kind of why I say, just humbly, I don't know. My view has done a complete 180. I thought, well, geez, this is kind of crazy that you have a firm like whatever Circle that's issuing dollars. The U.S. government, and it's not just the Fed, and it's not just Treasury, but it's much of the executive branch, really doesn't like somebody else being responsible for effectively issuing dollars. Isn't it just going to be the U.S. that ultimately, U.S. government that controls this and regulates the Circles and the Tethers out of existence? But you look at it now, and what's the total U.S. dollar stablecoin issuance? We just looked at this recently. I think it's like 150 billion. Does that sound right? Something of that magnitude. It's hard to reverse that.
Certainly, it's definitely a big number of sort, for sure. Yeah. So, let's talk a little bit about kind of the ways that things work in an international space. There's a lot of different regulatory spaces. A lot of other exchanges are located in international locations. Talk a bit about how international, in the CBDCs, you've got different governments that might be issuing them. Certainly, cryptocurrency is kind of built on the belief that it can kind of sit above one independent country's regulatory environment. How does that affect the things that Bullish is going to be doing?
Well, it's very difficult, just transparently. I mean, we have a whole team responsible for staying on top of these regulatory pronouncements, and it's difficult. There's a couple hundred countries we have to keep an eye on, and every week there's multiple new proposed rules, actual rules, guidelines, interpretations. I've been through this before. I started my career, as I said, in the commodities space, and these OTC swaps and commodities kind of dwarfed the listed market. And then what you saw come about in the kind of 2008, 9, 10 was a great deal of regulation on swaps. And it's not just the US, it's all around the world. Similarly, what followed that was regulation in credit default swaps, which is where I spent a significant portion of my career. And then regulation on clearinghouses and how clearing would be handled. And that's exactly what's going on in crypto now. So pretty much all of that regulation in those other asset classes, did not apply to digital assets. Almost all of it, by and large. And what you're seeing now is Western style governments are saying, wait a minute. We spent all this time putting together a swaps clearing requirement, capital obligations in clearinghouses, standardized terms for contracts, disclosure obligations, and none of that exists for crypto. And furthermore, there's bad actors at some of these exchanges. We've seen exchanges get hacked. We've seen exchanges rug pull. We've seen exchanges profit from the bankruptcy of their accounts, the liquidation of margin accounts. And you're telling me we've just let all of this kind of skate past all this whole other regulatory dragnet we came up with? Hold on a second. And so now you're seeing governments pull in digital assets. The difficulty is digital assets don't look exactly like an equity or a foreign exchange or a commodity or credit default swap. The actual tokens that are issued are not simply securities. In some cases, you could argue they are securities in a strict sense. but they're also the gas, I won't use the term gas because that'll be confused with kind of gas fees. It is the actual engine that makes these protocols go. And so it's more difficult if you just throw the same regulatory wrapper on top of digital assets. You could squelch innovation. And so you're seeing governments wrestle with what is the appropriate way of doing this. And it's not going to end anytime soon, but this will be a heavily regulated space. I mean, that is the takeaway. You will see more regulation around exchanges and the capital that they hold in terms of their clearing obligations. You will see more regulation about the types of marketing that can be done. Are people promising certain types of returns? And if so, they're going to need to register those products. And that's going to be all around the world. It's not going to be every country, but it's going to be a lot of the most sophisticated, the countries that are the most evolved with respect to their regulatory regimes.
Yeah, I definitely think more clarity, more regulation, more oversight of these kinds of things. It's coming, and it's almost necessary. I mean, our first session was talking about how they haven't really changed the tax code as it relates to digital assets since 2014. I mean, that is kind of jaw-dropping in of itself. So yeah, no, and look, there's the libertarian ethos of digital assets, and so I'm sure there's some people listening that are like, oh, granddad's talking about how this is going to be regulated. Like, I'm not saying it's right. I'm just saying it is. Like, it just is. I mean, but the government's going to find ways to co-opt it, not fully, but to co-opt it. I think the most interesting is around DeFi. You have some of these DeFi protocols. They effectively have done an IPO. They do no AML, no KYC. They're growing like a weed. You could argue they're contributing greatly to the efficiency of the economy. You could also argue they're kind of returning power to the people. They're cutting out middlemen. They're allowing retail. Like compare if you buy an IBM share of stock. You're not going to get a yield on that by lending it out. Only Goldman is going to lend it out, over here in lower Manhattan. Crypto, it's the opposite. You buy some ETH, you can get a yield on it. You buy some Uni, you can get a yield on it. So like, you could argue that everything going on in DeFi is a net positive, but at the same time, there might be, a Russian oligarch with $500 million in there earning a yield. And the people operating the DeFi platform go, oh, what can I do? Yes, I may be an American and went to an American school and got funded by Americans and I built the thing in America, but it's DeFi, so you can't come after me. Like something is going to give in DeFi, and I don't know what it is. Yeah, I agree with you. I mean, I think DeFi is definitely an interesting space. I think it offers a potential to democratize, but I do think that people have studied and shown that a lot of those markets are kind of dominated by some large players and some big fish and stuff like that. But I think the future is bright and there's exciting things. I'll give you the last word on this. What excites you the most about the next 5 years? What are you excited to see in crypto markets or even in blockchain more generally? What's the horizon and what gets you excited in the morning?
The number one thing, I love working with great people. I mentioned Mark Woods, but there's a million of them at Bullish. They're just really just smart and eager to try new things and take risk. And if I can give one piece of advice to the group here, something that I screwed up kind of in the very earliest part of my career, take risk, especially when you're young. You're not going to have, a mortgage. You're not going to have 3 kids. Take some risk, some career risk, some financial risk. Be willing to go out on a limb, because there's clearly a correlation between risk and reward. But the thing I love about what we're doing now is the people principally. And when I look back in my career, the most fulfilling and satisfying parts of my career are when I was working really hard, because it was hard, because there were problems to solve. And gosh, it feels like, how can the week be over? I had 20 things on my to-do list and I only did 2 of them. And now my to-do list is 22. I added net 2 to it. Those are the times I love. And that's the exact period we're in at Bullish. We're growing. Customers like what we're doing. We're trying to figure out regulation. We're trying to figure out technology. Like you asked about the metaverse. I basically have said, like, we can't even focus on the metaverse, even though it's a huge opportunity. So I'm excited about the people, and I'm excited about the growth and the challenges that come with that growth.
All right, great deal. Well, hey, thank you so much for your time here to be a part of the conference. As a kid of a stockbroker, it's certainly been a thrill to talk to that guy who used to run the New York Stock Exchange. I've had CNBC in my life basically since birth. But
nice.
Cheers! It's been great to have you here and be a part of the conference. And I wish you guys at Bullish the best as you get going and everything gets started. It sounds like some really exciting stuff going on.
Awesome. Like I said, I look forward to meeting the crew, the larger crew in person, in the future. COVID's robbed us of so much, but let's hope that this is the end.
Absolutely. Let's keep the connection going. And, for those that are here on the conference, can stick around. We've got another session coming up at noon with Lee Schneider, who's the general counsel of Ava Labs. And he was a blockchain veteran, and also is somebody who was at Blocksburg, the first summit that we had back in 2019. So stick around. We're going to be talking about the future of CBDCs. So cheers, and thanks again to Tom. We'll see you in about 7 minutes.